Altcoin season is here, and while everyone's focused on which coins will be 10x, they're completely ignoring the wealth protection strategies that will determine whether they actually keep their gains when this bull run ends. I'm talking about crypto investors who made life-changing money in previous bull runs, only to watch it all disappear because they didn't protect their wealth properly. I'm talking about people who are about to make serious money in this alt season but have no plan for preserving it when the inevitable crash comes. Despite what you might think, the biggest risk isn't picking the wrong coins, it's making the right picks but losing everything because you didn't protect your wealth properly. Now, let me tell you why you should listen to me about crypto wealth protection. I'm with Numeratus, and we're not your typical accounting firm. While other firms are still trying to figure out what Bitcoin is and telling crypto clients they're too risky to work with, we've been specializing in crypto tax and wealth protection strategies for years. We've worked with crypto investors who made millions in previous bull runs and lost it all because they didn't have proper protection strategies. We've helped clients save hundreds of thousands in taxes through proper crypto business structuring. And we've seen every mistake you can possibly make with crypto wealth, which means we know exactly how to help you avoid them. Most accounting firms won't even touch crypto clients because they don't understand the complexity and regulatory requirements. We built our entire practice around these complex crypto situations that other firms are afraid of. Now, if you clicked on this video, you're probably in one of several situations. Maybe you made money in crypto before, but lost most of it in the crash, and you don't want that to happen again. Maybe you're new to crypto and you want to make sure you protect whatever gains you make. Or maybe you're already up significantly and you're wondering how to lock in your profits without missing out on more upside. Either way, you're probably feeling the same thing that every smart crypto investor feels during alt season: excitement about the potential gains and anxiety about how to actually keep the wealth you're building. Here's what I'm going to show you in this video: the wealth protection strategies that separate crypto investors who built lasting wealth from those who just ride the roller coaster. These aren't just about taxes or compliance. They're about comprehensive wealth preservation strategies that still work regardless of what the market does. And by the end of this video, you're going to understand exactly how to protect your crypto wealth while still participating in the upside of alt season. But here's what's really going to surprise you. The most dangerous threat to your crypto wealth isn't market volatility or regulatory crackdowns. It's the psychological trap that destroys more crypto fortunes than anything else. And most investors fall into it even without realizing it. So let me show you exactly how to protect your wealth during alt season. Problem number one: the profit-taking trap. Why paper gains become real losses. Let me tell you about a crypto investor who learned this lesson the hard way. Imagine you bought Solana at $20 and watched it run up to $200. You're up 10x. You're feeling like a genius, but you don't want to sell because what if it goes to $500? So you hold and you watch it crash back to 50. You tell yourself it's just a correction, it'll all come back. But then it crashes to 20, then 10. Your 10x gain becomes a 50% loss, and you realize you should have taken some profits along the way. This happens to crypto investors every cycle. They make incredible gains on paper, but they never actually realize those gains because they are always waiting for more upside. Do you have a systemic plan for taking profits during this alt season, or are you just hoping to time the perfect exit? Most crypto investors make great gains on paper, but never actually lock in wealth because they don't have a profit-taking system. You set predetermined levels. Well, you take profits regardless of how you feel about the market. Maybe to take 25% at 3x, another 25% at 5x, another 25% at 10x, and let the final 25% ride. This way, you're guaranteed to lock in significant gains while still participating in potential upside. You remove emotion from the decision and ensure you're actually building wealth instead of just watching numbers go up and down. Now, despite what you've been told, taking profits systemically is the one step that is by far the most important and yet also the most overlooked aspect of crypto wealth building. But even with perfect profit taking, there is another critical mistake that most people make. Problem number 2, the diversification illusion, moving risk instead of building wealth. This is where most crypto investors make the biggest mistake. They take profits from one crypto and immediately put it into another crypto, thinking they're diversifying. But they're not building wealth. They're just moving risk around within the same volatile asset class. Imagine you made $500,000 in profits from various altcoins during the alt season. Instead of diversifying into other asset classes, you put it all into Bitcoin and Ethereum, thinking you're being conservative. But you're still 100% exposure to crypto market risk. When the crypto market crashes, and it will crash eventually, your entire net worth crashes with it. You haven't actually built wealth, you've just accumulated more of the same type of risk. Are you converting crypto gains into diversified wealth? Or are you just moving money between different cryptocurrencies? Most crypto investors never actually build diversified wealth because they keep all their gains within the crypto ecosystem. Here's what real wealth diversification looks like. You take crypto profits and invest them in real estate, stocks, bonds, businesses, or other asset classes that don't correlate with crypto. You build a portfolio where crypto is just one compound, not the entire foundation. This way, when your crypto crashes, you still have wealth in other assets that actually may benefit from crypto's decline. But after learning the fundamentals, there is one thing that people completely neglect, and it's something that should be one of the most important things to you when building crypto wealth: protecting your gains from taxes. Problem number 3, the tax destruction trap, giving 40% to the government. This is where crypto investors lose massive amounts of wealth without even realizing it. They focus on making gains but completely ignore the tax implications. And they end up giving 30 to 40% of their profits to the government unnecessarily. Imagine you made $1 million in crypto gains this year through active trading. You're feeling wealthy, but then tax season comes and you realize you owe $400,000 in short-term capital gains tax because you didn't hold anything for more than a year. Suddenly your $1 million gain becomes a $600,000 gain, and you might not even have the cash to pay the taxes if you reinvested everything back into crypto. You're forced to sell more crypto to pay taxes, potentially at the worst possible time. Do you understand the tax implications of your crypto tax trading strategy? Are you optimizing for after-tax returns? Most crypto investors focus on pre-tax gains and get destroyed by taxes they didn't plan for. Here's what tax-optimized crypto investments look like. You understand the difference between short-term and long-term capital gains treatments. You plan your trades to optimize for tax efficiency, not just maximizing gains. You set aside money for taxes as you go, not just at the end of the year. You might make slightly lower pre-tax returns, but you keep significantly more after-tax wealth. Now, the next step I'm going to share with you is possibly one of the most important things to do when it comes to crypto wealth protection, but yet it is one that people disregard the importance of the most: building proper business structures. Problem number 4, the amateur versus the professional trap, missing business advantages. This is what separates amateur hour from the professional wealth builders. Most people treat crypto investing as a hobby or a side activity, but if you're making serious money, you need to treat it like the business it actually is. Imagine you're making $500,000 per year from crypto activities. You're researching projects, analyzing markets, managing portfolios, and essentially running a full-time investment business. But you're doing it as an individual, which means that you're missing massive tax advantages and protection opportunities. When you structure your crypto activities through proper business entities, you can deduct your research costs, your equipment, your education, your home office, and many other expenses. You can also access business-level tax strategies that aren't available to personal investors. Are you treating your crypto activities like the business they actually are? Or are you leaving money on the table by operating as an individual? Most serious crypto investors are leaving tens of thousands of dollars on the table every year because they haven't structured their activities as a business. Here's what professional business crypto structure looks like. Proper business entities that handle your crypto activities, business bank accounts that separate your crypto business from personal finances, business deductions for all your crypto-related expenses, professional tax treatment that minimizes your overall tax burden. You're not just investing in crypto, you're running a professional investment business with all the advantages that come with it. Now that we have everything we talked about settled, the next step is by far the easiest process. Yet most people overcomplicating it. It's building proper security and estate planning. Problem number 5, the security and succession nightmare, losing everything to hacks or even death. This is what ensures your crypto wealth survives both cyber threats and life events. Most crypto investors focus on market risks but completely ignore security risks and succession planning, which can be just devastating. Imagine you've built a $2 million crypto portfolio, but you haven't properly secured your private keys. You haven't set up proper estate planning, and you haven't protected yourself from cyber threats. One hack, one lost password, or one unexpected life event could wipe out everything you've built. Or imagine you die unexpectedly, and your family has no idea how to access your crypto holdings. Your wealth dies with you because you never set up the proper succession planning for your digital assets. Have you properly secured your crypto holdings and set up succession planning for your digital wealth? Most crypto investors spend more time researching which coins to buy than they do protecting the wealth they've already built. Here's what proper crypto security and succession looks like: multi-signature wallets and proper key management, hardware security for significant holdings, estate planning that includes digital asset succession, insurance coverage for crypto holdings where available. You're not just building wealth, you're protecting it from all the threats that could destroy it. The next part can take you from being someone who makes money in crypto to someone who builds generational wealth through crypto. And it's something that most successful crypto investors do automatically. Problem number 6, the cycle thinking trap, building wealth that lasts decades. This is what separates crypto investors who get rich from those who build lasting wealth that survives multiple market cycles. Most people think in terms of the current bull run, but wealthy crypto investors think in terms of decades and generations. Imagine you use this alt season to not just make money, but to build the foundation for generational wealth. You take profits systematically, diversifying it into other assets, optimizing your taxes, building proper business structures, and creating succession plans. When the next crypto winter comes, you're not just surviving, you're positioned to buy more at lower prices because you preserved wealth from the previous cycle. You're building wealth that compounds across multiple cycles instead of just riding the roller coaster. Are you building wealth that will survive multiple crypto cycles, or are you just trying to get rich in this one? Most crypto investors focus on getting rich quick instead of building wealth that lasts across multiple market cycles. Here's what generational crypto wealth building looks like: systemic profit taking across multiple cycles, diversification into aspects that appreciate over decades, tax efficient structures that preserve wealth across generations, estate planning that transfers digital wealth efficiently. You're not just participating in alt season, you're using it as one step in a multi-decade wealth building strategy. Look, alt season is an incredible opportunity to build life-changing wealth, but opportunity without proper wealth protection is just gambling with higher stakes. Every day you participate in this bull run without proper wealth protection strategies, you're risking everything you're building. Every gain you make without a plan to preserve it is just a number on a screen until you actually lock it in and protect it. But the good news is that you can participate fully in alt season upside while building real, lasting wealth. You just need to implement the right strategies before the opportunity passes. If you're serious about turning this alt season into generational wealth, if you want to make sure you actually keep the gains you're making, and if you want to build wealth that survives market crashes and grows across multiple cycles, you need professional guidance. At Numeratus, we specialize in helping crypto investors build and protect real wealth. We understand both the opportunities and the risks in crypto, and we help you maximize those opportunities while minimizing the risks. We're not your typical accounting firm. We work with serious crypto investors who understand that making money and keeping money are two completely different skills, and both are essential for building lasting wealth. If you want to learn more about how to protect your crypto wealth during this alt season, and how to build tax-efficient strategies for your crypto activities, and how to turn crypto gains into generational wealth, visit numeratus.us or contact us directly. Don't let this alt season be another cycle where you make great gains on paper, but don't build lasting wealth. Don't assume that making money in crypto automatically means you're building wealth. And don't wait until the next crypto winter to start thinking about wealth protection. Because remember, all season comes and goes, but wealth protection strategies work in all market conditions. Build them now while you're making money so you can keep that money when the market changes.